Well, welcome everyone to this Kingdom Finance Revolution live session for Friday, 16th of January, 2026. We're going to take a little bit of a look at silver. There's been so much in the news. I know we've been focused on other things these last few weeks, but so many people have been saying, well, what about silver? What about what's happening with silver? Talk about silver. So I'm going to link back to some earlier talks and just give a short, hopefully a short session on what silver is all about, where it's going, what we might want to do as believers, and even if you're not a believer, what's silver all about? Because silver has rocketed up dramatically in this last few weeks. It's in a current rally, and I want to look at some historical valuation metrics that people talk about, the supply-demand dynamics, and some of these other narratives around it. So what's really happened is the surge in silver prices. It's currently over $90 an ounce, which it hasn't been, I don't think, ever in terms of records. So this is a rally, if you will, as they call it in silver. So we want to know, is this a rally? Is this really catching up? Or is this some sort of bubble or a short-lived spike? And of course, prices go up or down. I'm not giving investment advice. This is just me talking around the space. The other thing to keep in mind is, recently over $1 billion have gone into silver, but mainly into ETFs, exchange traded funds. So it isn't physical silver. It's kind of like me saying I've got a piece of paper that represents silver, and if you own that paper and silver goes up, then you own the increase. If it goes down, you bear the decrease in value. So it's not really connected in the same way to physical silver. So we have a whole swathe of things happening that have given rise to this. And of course, that means the conspiracy stuff comes out and all of the telltale extravagant talk comes out. So we want to just set the floor, the basics, the floor, the understanding, what it's really all about. It's not just retail mania. There's institutional drivers for silver that don't really exist to the same extent for gold. So we're going to talk a little bit about that as well. So why? Silver is a precious metal, but it's also an industrial metal. And that's why you heard Elon Musk talking about his concern about the rise of silver, because it's used in solar power, it's used in electronic, it's used in medical technology. So it's got dual demand. Dual demand. So silver has a demand and a consumption cycle. Very little gold is consumed, lost in the system. If you wear jewelry, it eventually gets melted down back into gold. There's nothing lost in the conversion. It goes back into a bar. It cycles itself. Very little gold is lost, whereas silver is lost in these commercial cycles. So it has a value cycle that's different from gold. So one of the things we have to look at is the gold and silver ratio, and this is what people talk about. Historically, the gold and silver ratio, going back to Roman times, and this was really fixed because of the use of silver and gold in a sort of bimetallic process. You had gold coins and you had silver coins, and the silver and gold ratio was therefore somewhat fixed. X number of silver coins got you a gold coin, and that was in some cases set by government. So, Roman Empire was 8 to 12 to 1. U.S. history, the legal ratio under the Coinage Act of 1792 was 15 to 1. So remember that, 15 to 1. And going back to Roman times, 12 to 1. So, broadly similar. But after the end, we talked about why everything changed in 1971 in one of our talks. But when bimetallism in the gold standard was broken, then the ratio began to float. And because it's floating, it's been subject to market forces, to supply, demand, hoarding, industrial uses, everything else floating around. But we still come back to the gold and silver ratio as kind of an emotional hook as to where gold should be, or where gold could be, or where gold has been historically. The 100-year ratio is kind of interesting to follow. I'll put a chart up on it, but it's kind of interesting to follow because it actually went up to 120 to 1, which meant the silver was becoming incredibly cheap compared to gold. And that kind of ratio compression where silver starts to catch up is kind of where it seems like we are now, which represents a value opportunity. So you might look at the ratio and say it should be, or it could be, or it historically has been around 15 to 1. We're now 120 to 1. Silver has some major catch up to do. So these ratio targets engage us in looking at the value. So if gold is $4,600 an ounce roughly, and the ratio moved 65 to 1, silver would be roughly $70 an ounce. So we're in this ratio adjustment right now to look at it. If we looked at the historic ratio, purely hypothetical, as a reference point, it would imply that silver could, should, may rise to above $300 an ounce. So all this talk of $1,000 silver and stuff like that, even with the wildest expectations, and going back to a historical standard that isn't driven anymore by a minting of coins, you're still looking at around 300 an ounce. But that's still a massive increase from where we are today. So you have to contextualize it in that context. So some of the drivers of this current rally, so you can understand it's not just a catch-up. There's macro uncertainty, and this is something we talk about in the creaking chair. Our economies, and as Christians, we have a real focus on this because we kind of expect a global monetary collapse. There's macro uncertainty, fears of currency weakness, monetary policy shifts, etc. So there's a demand right now for safe havens. That's pushing things up. What's the brief thesis on the creaking chair collapse of the monetary system? Well, Trump, with all the goodwill in the world, doing everything he can with tariffs to preserve and save his nation from economic collapse at the expense maybe of other nations, is still going to be hard-pressed to do anything with approximately 40 trillion headline debt. It's going to be very difficult for him to deal with that. And then, of course, the circa 100 plus trillion of liabilities that exist even beyond that. So the reality is we believe as Christians and we believe as market watchers that we are in a system that is creaking and collapsing, but it's not a single point failure. It collapses across a great deal of spectrums and can be saved and brought back and all of the stuff. We saw that with quantitative easing after 2007. So we also have retail and institutional inflows. So with this record exchange traded funds and structured products, that's real investment in interest, right? We also have inventory issues. So thinning inventories in key bullion markets, they mean people are having supply pressures to get more silver in because people want physical, they want to make sure it's backing, they want to make sure it's held. And that, of course, means that there's a lot of people dumping in for speculative positioning. So they see it's rising, they want to get in on part of the rise, but they aren't really fundamental to the market. They aren't holding it long term as a store of value. They're sort of pressing it forward. So if you look at that, it leads to this outlier narrative. I'm just going to touch on it briefly, that somehow hyperinflation, fiat currency debasement, system breaks, the fact that people can't settle these ETFs because they don't have physical silver if the system starts to break. I think all those things are true at an end game point, when it all starts to collapse, then people are going to want gold and silver and physical and barter trade events and things like that, and that will drive silver value up. It doesn't appear that we're at that point right now, so we want to just talk about where this is at. I think we're probably, in a place where the silver and gold prices, no matter how they adjust in terms of ratio, reflect the fact that our governments have been printing money like mad sailors, doing all kinds of crazy things that don't add value to the economy. And you could make an argument that really the price of these things hasn't gone up at all. It's just you need more of the fake paper money to buy what's there. In other words, the value of your pound and dollar has gone down, not that the value of these other things has gone up. And I think there's some elements of deep truth to consider there, but that doesn't explain, shifting values and catch up. So physical bullion and storage, again, this is a problem. You always want to own allocated metals. If you own 100 ounces of silver with some company and they say, yes, it's backed by silver, you don't really own that silver. You have a claim for 100 ounces. You're a liability. If they go bust, you're a creditor like everybody else trying to claim against the assets of the company. Whereas if they've taken 100 ounces of silver in your name, recorded the bar numbers, put it in a drawer with your name on it, that's allocated. And if the company goes bust, then it's a company that's gone bankrupt holding your assets, and eventually you'll get your assets back. So allocated versus unallocated is critical. What about silver in terms of ownership? People have asked me always, how do you own silver? How do you own silver? Of course, this is part of the reason we're doing the project that we're doing, because it's very difficult to own large volumes of silver and keep them in your home and insurance. And then what do you do when you go to Starbucks with your lump of silver? How are you going to make that exchange happen? So you need to de-friction that entire cycle. But the reality is there are many companies in the UK, US, Singapore, other places that will allow you to buy silver. They'll hold it for you. It's allocated to you. You need to always check how that allocation is affected, and therefore they will facilitate the trade and the sale. And there's usually an annual fee based on what you're holding, which is not extreme, but it is a cost to do that. Now, why is that relevant? Well, it's relevant because if, for example, in the UK, if you buy silver, and let's say, I'll just round it up, let's say you buy 100 pounds worth of silver, guess what? You probably have to pay 20% VAT or something on at least a good portion of that. And indeed, if you're holding it in bars and then it goes up in value, not only did you have to pay VAT, but you have to pay capital gains tax. Silver coins are exempt from capital gains tax, but not exempt from VAT. So the reality is, if you want to hold it physical and get it into your hands, if you're in the UK, you have to pay above the sort of melt value or the market value of silver, which then means silver has to appreciate quite a bit to take out those costs. Not only the premiums that people make to get it to you, the mailing costs, all of these things have to come out, which means that you can buy a couple of ounces of silver, think you're doing well, and you go to sell those couple of ounces of silver, and you're actually not making any money unless the silver price jumps a fair amount. So the only way to really access this market, if you don't want to do some of these paper products, is to make sure that it's held outside of tax jurisdictions with one of these companies that offer an allocated service, in which case then you can buy it much closer to the spot price. You don't have to pay that unless you order it to be delivered to you in your residence, and you still have this asset in your hand. And that's probably what many people would consider doing. So I always look at jurisdictional tax and storage summaries. I remember somebody that bought a large bar of silver from what was then one of the mints in the Channel Islands, and was quite surprised when it was delivered that he had such a big additional bill to pay because he thought he was buying silver. Keep that in mind. US is difficult, but some jurisdictions are better than others for it, but you really do need to look at it. The other thing is, I think silver is more volatile than gold. Gold is kind of an anchor product. Yes, it does go up and down, but historically it never goes up and down, it only goes up. So there might be some micro adjustments within time, but it tends to have a steady flow. Whereas silver is maybe structural or cyclical. So you could easily get caught saying, okay, I'm going to join in with silver, and then it goes down 20%, and then it sorts itself out and finds a new level. I think broadly, though, if you look at those ratios, I think it would indicate that we still have some catch up to do because of the big rise in gold prices. And I think there's more reason for silver to do that than other products because silver has industrial use and everything else. Now, what could affect that? Of course, if silver gets more pricey, then maybe some of these industrial uses will fall away. They'll find other mechanisms in their industrial processes other than silver. So you'll always have to be looking at all of these factors when you go. So I think that by the way, the gold-silver ratio, just so you know what it is, it's the number of ounces of silver needed to buy 1 ounce of gold. That's the gold and silver ratio. Remember, the number on that was sort of 10 to 15 to 1, historically 15 to 1 in the US, and now it's sort of 47, 60 to 1. So silver is much less valuable than it was in the past, which means that most people believe, and I certainly believe, that it's heading up. So the target price for silver at 30 to 1 would be roughly 150 US dollars. And I think 30 to 1, twice the historical ratio, is probably not a bad point for people to start thinking about. If people think that that's kind of reasonable, that would mean there's still an upside in silver. Effectively, it could double in price as it catches up to that demand, but subject to all of these things. So bullish, $130 to $150 on silver. Status quo, sort of $100 or more. Pessimistic, that it might go back down a little bit to where we're at. Why is it important? I think that from a Christian perspective, God is telling us to focus on primary infrastructure and resource. And as we build out our new kingdom economy models that are based on gold and based on silver, we can't forget the fundamentals of ownership of these instruments. Or these assets. Don't wait for God's new economy to come through what we're doing, through what other people are doing, and avoid the fact that, or miss the fact that you can actually invest directly. So that's really my short update on silver. Hopefully it's useful for people. There's so much more in there. I'll try and put some more data on the post on the website that you can access, as well as some slides and other information and context. Perhaps even I did a little graph of places that you can buy and comparing the costs and things like that, so people can get an understanding of what that's about. So Father, I just pray that there be blessing. I pray that there be favor on people. I pray that there be understanding of some of these dynamics. I know that I mentioned this many years ago. I mentioned it earlier this year. If people had listened to what I was saying and put money in 100,000 in gold, or silver, they'd have 200,000 now. So, also forgive us where we haven't listened and where we haven't sought your wisdom in these things and been guided by your hand and haven't listened. So, Father, open our eyes, open our ears, give us wisdom, we pray, in the name of Jesus. Amen.